if it is, if it's not going to zero, it's going to a million, right? Because as soon as you acknowledge its legitimacy, then there's $500 trillion of capital floating out there. And when 1% of it flows into Bitcoin, it's got to go to a million and then 10 million. 1, 2, 3% is all it takes for this thing to blow past the market cap of gold.
Michael Saylor doesn't mince words when he outlines the wealth-building potential of Bitcoin. From describing it as digital capital to forecasting a trillion-dollar surge in its market cap, his thesis is rooted in an unwavering belief that Bitcoin is the most efficient and secure vessel for preserving and multiplying wealth. Saylor argues that traditional assets like real estate and securities are encumbered by risk, economic, political, environmental, while Bitcoin offers escape velocity. His bullish stance goes far beyond a typical investment pitch. It's a vision of financial transformation fueled by access, mobility, and math.
What is the use case of capital? Wealth preservation and growth. Why is Bitcoin digital capital? Well, because it is a crypto network backed by digital power that's capped at 21 million, that's universally embraced as a commodity, not a security, not a proprietary token, that's beyond the control, corruption, or censorship of a government, a corporation, an individual. So it is a crypto monetary network. It went from nothing to 2 billion to 20 billion to 200 billion to 2 trillion.
Saylor begins by redefining Bitcoin, not as digital currency, but as digital capital. That framing matters because it positions Bitcoin as a long-term wealth generator, not just a payment tool. The scarcity baked into its code makes it immune to inflationary pressures and manipulation. And since it's not tethered to any government or central bank, its performance is unbound by traditional constraints.
Bitcoin strips the risk off of all physical real estate. So if you wanted to hold real estate as a long-term store of value, you know what happened in LA, you know what happens with hurricanes. You get fires, floods, you get rent control, you get politics, you get expropriation. What's your real estate in Nigeria going to be worth when the currency goes to zero? So it strips the real estate risk off of tangible property. It strips the currency risk out of securities.
He delves into the dangers of physical and political exposure in traditional markets. Real estate, once a symbol of financial security, becomes a liability in an unstable world. Currencies can collapse, securities can default, but Bitcoin, in Saylor's eyes, is sovereign wealth with no strings attached, untouched by war, weather, or economic policy.
So Bitcoin doesn't have counterparty risk like a security or a financial instrument. It doesn't have physical risk. And finally, it's literally without counterparty risk to a creditor, a culture, a country. If you're owning Picasso's, you have counterparty risk to a culture. If you think you're insulated because you own the Patriots, you have counterparty risk to a different culture. So you don't want to be counterparty to any political entity. You don't want to be counterparty.
This notion of no counterparty risk is foundational. Unlike gold stored in vaults or stock tied to a corporate entity, Bitcoin lives in a decentralized, permissionless network. That separation from the traditional financial system gives it an edge as a vehicle for trustless wealth storage. In Saylor's eyes, that's what makes it outperform everything else.
So on Saturday night, if you need $1 billion of credit, you can get $1 billion from the Bitcoin network if you want to pay the right amount. If you want 100 to 1 levered bet negative, you can actually either you can place $1 billion bet in a minute, you can extract $1 billion of credit. So it is a monetary network that's giving you leverage and liquidity. Like literally it traded like $100 billion in like 48 hours over a weekend or something.
Beyond safety, Saylor touts Bitcoin's utility. He sees it as the world's first true liquid global market, operating 24/7 with no borders and no middlemen. This around-the-clock access makes it a tool for not just holding wealth, but actively growing it, one trade at a time, even on weekends.
I do $1 billion deal and I get $1 billion of Bitcoin up front that I invest at 30%. I pay you 10% and a fixed thing on the back end. If you're good at exponential math, the conclusion you'll come to is that I'm going to have $10 billion in capital in 10 years, making $3 billion a year, and I'm going to be paying 100 million. So I'm keeping 2.9 of the 3 billion. And so the profit on the instrument on the back end is obscene.
Then there's the math. Saylor doesn't just evangelize Bitcoin, he engineers financial instruments around it. From convertible bonds to perpetual swaps, his firm's strategy is simple: borrow cheap, invest high, keep the spread. The key? Bitcoin's asymmetric return profile. It turns fixed costs into exponential gains.
People are waking up to the idea that they can put their money in cyberspace. Then the next issue is, well, what's the dominant crypto monetary network? And there's 15 million tokens and there's 10,000 crypto whatevers. And when you look at it, what you conclude is 99% of the true capital has been invested in Bitcoin.
As digital transformation reshapes finance, more investors are fleeing legacy systems and moving capital to cyberspace. But in the jungle of altcoins, only Bitcoin has proven itself as the trusted reserve asset. For Saylor, the market has already voted, and Bitcoin won.
The second best currency is the euro. If you go to Europe, there's a 99-to-1 predilection to convert your euros into dollars. The Europeans don't want to be in Europe, okay? The billionaires don't want to be in France. Everybody in Africa wants their money out. Everybody in Russia wants their money out of Russia. Nobody in China wants to keep their capital in China. No one in South America wants to keep their capital in South America. Everyone is fleeing to the US real estate market, the US securities market, the US currency. And if they can't move their capital there, what's the second best idea? Well, what if I had Bitcoin, which I self-custodied, which was supported by the US capital markets?
The exodus from unstable economies is nothing new. But now, instead of waiting for permission to invest abroad, capital can move instantly, digitally. For the world's wealthiest, and even for average savers in chaotic regions, Bitcoin represents that second-best option to U.S. markets. A lifeboat not tied to borders.
So we're like sitting with almost 50 billion of permanent capital as the seasoned issuer with the largest pool of Bitcoin in the world. And so what our business strategy is, we're securitizing the market. So it's like we're going to borrow money at 0% interest. Like we just issued $5 billion of convertible bonds at 0% interest, and we're going to invest it at 60% return. Right. So we're borrowing at 0, investing at 60, scraping the difference for our shareholders.
Saylor's business isn't just benefiting from Bitcoin, it's amplifying its effects. By using Wall Street's tools like convertible bonds and preferred shares, he's found a way to use legacy finance to supercharge Bitcoin accumulation. The end goal? Billions in capital, deployed in a monetary asset that appreciates while traditional options stagnate. Throughout this discussion, Michael Saylor painted a clear picture. Bitcoin is not merely a speculative asset. It is the foundation for a new financial order. Its built-in scarcity, borderless utility, and unmatched independence from political or institutional risk make it the ultimate tool for wealth creation in an unpredictable world. Whether you're an individual in Argentina or a hedge fund in New York, the appeal is the same. Escape risk, embrace exponential growth.
Bitcoin is economic empowerment to 8 billion people. It's important to the human race. It's going to lift the civilization.
What do you think? Is Bitcoin really the fastest path to long-term wealth? Or is Saylor's vision too good to be true? Let us know in the comments below.